Hello everyone, welcome to YouTube channel Profit with Candlestick Charts. Topic of this video is brief descriptions of many common candlestick patterns. Let's start. First candlestick pattern, abandoned baby. A rare reversal pattern characterized by a gap followed by a doji, which is then followed by another gap in the opposite direction. The shadows on the doji must completely gap below or above the shadows of the first and third day. Next candlestick pattern, dark cloud cover. A bearish reversal pattern that continues the uptrend with a long white body. The next day opens at a new high, then closes below the midpoint of the body of the first day. Next candlestick pattern, doji. Doji form when the open and close of a security are virtually equal. The length of the upper and lower shadows can vary, and the resulting candlestick looks like either a cross, inverted cross, a plus sign. Doji convey a sense of indecision or tug of war between buyers and sellers. Prices move above and below the opening level during the session, but close at or near the opening level. Next candlestick pattern, downside Tasuki Gap. A continuation pattern with a long, black body followed by another black body that has gapped below the first one. The third day is white and opens within the body of the second day, then closes in the gap between the first 2 days but does not close the gap. Next candlestick pattern, Dragonfly Doji. A doji where the open and close price are at the high of the day. Like other doji days, this one normally appears at market turning points. Next candlestick pattern, Engulfing Pattern. A reversal pattern that can be bearish or bullish depending upon whether it appears at the end of an uptrend, bearish engulfing pattern, or a downtrend, bullish engulfing pattern. The first day is characterized by a small body, followed by a day whose body completely engulfs the previous day's body and closes in the opposite direction of the trend. This pattern is similar to the outside reversal chart pattern, but does not require the entire range, high and low, to be engulfed, just the open and close. Next candlestick pattern, evening doji star. A 3-day bearish reversal pattern similar to the evening star. The uptrend continues with a large white body. The next day opens higher, trades in a small range, then closes at its open, doji. The next day closes below the midpoint of the body of the first day. Next candlestick pattern, evening star. A bearish reversal pattern that continues an uptrend with a long white body day followed by a gapped up small body day, then a down close with the close below the midpoint of the first day. Next candlestick pattern, falling 3 methods. A bearish continuation pattern. A long black body is followed by 3 small body days, each fully contained within the range of the high and low of the first day. The 5th day closes at a new low. Next candlestick pattern, Gravestone Doji. A doji line that develops when the doji is at, or very near, the low of the day. Next candlestick pattern, hammer. Hammer candlesticks form when a security moves significantly lower after the open, but rallies to close well above the intraday low. The resulting candlestick looks like a square lollipop with a long stick. If this candlestick forms during a decline, then it is called a hammer. Next candlestick pattern, hanging man. Hanging man candlesticks form when a security moves significantly lower after the open, but rallies to close well above the intraday low. The resulting candlestick looks like a square lollipop with a long stick. If this candlestick forms during an advance, then it is called a hanging man. Next candlestick pattern, Harami. A 2-day pattern that has a small body day completely contained within the range of the previous body and is the opposite color. Next candlestick pattern, Harami Cross. A 2-day pattern similar to the Harami. The difference is that the last day is a next candlestick pattern, Doji. Next candlestick pattern, inverted hammer. A 1-day bullish reversal pattern. In a downtrend, the open is lower, then it trades higher, but closes near its open, therefore looking like an inverted lollipop. Next candlestick pattern, long body, long day. A large price move from open to close, where the length of the candle body is long. Next candlestick pattern, long-legged doji. This candlestick has long upper and lower shadows with the doji in the middle of the day's trading range, clearly reflecting the indecision of traders. Next candlestick pattern, long shadows. Candlesticks with a long upper shadow and short lower shadow indicate that buyers dominated during the first part of the session, bidding prices higher. Conversely, candlesticks with long lower shadows and short upper shadows indicate that sellers dominated during the first part of the session, driving prices lower. Next candlestick pattern, Marubazu. A candlestick with no shadow extending from the body at either the open, the close or at both. The name means close cropped or close cut in Japanese, though other interpretations refer to it as bald or shaven head. Next candlestick pattern, morning doji star. A 3-day bullish reversal pattern that is very similar to the morning star. The first day is in a downtrend with a long black body. The next day opens lower with a doji that has a small trading range. The last day closes above the midpoint of the first day. Next candlestick pattern, morning star. A 3-day bullish reversal pattern consisting of 3 candlesticks, a long-bodied black candle extending the current downtrend, a short middle candle that gapped down on the open, and a long-bodied white candle that gapped up on the open and closed above the midpoint of the body of the first day. Next candlestick pattern, piercing line. A bullish 2-day reversal pattern. The first day, in a downtrend, is a long black day. The next day opens at a new low, then closes above the midpoint of the body of the first day. Next candlestick pattern, rising 3 methods. A bullish continuation pattern in which a long white body is followed by 3 small body days, each fully contained within the range of the high and low of the first day. The 5th day closes at a new high. Next candlestick pattern, shooting star. A single day pattern that can appear in an uptrend. It opens higher, trades much higher, then closes near its open. It looks just like the inverted hammer except that it is bearish. Next candlestick pattern, short body, short day. A short day represents a small price move from open to close, where the length of the candle body is short. Next candlestick pattern, spinning top. Candlestick lines that have small bodies with upper and lower shadows that exceed the length of the body. Spinning tops signal indecision. Next candlestick pattern, stars. A candlestick that gaps away from the previous candlestick is said to be in star position. Depending on the previous candlestick, the star position candlestick gaps up or down and appears isolated from previous price action. Next candlestick pattern, stick sandwich. A bullish reversal pattern with 2 black bodies surrounding a white body. The closing prices of the 2 black bodies must be equal. A support price is apparent and the opportunity for prices to reverse is quite good. Next candlestick pattern, 3 black crows. A bearish reversal pattern consisting of 3 consecutive long black bodies where each day closes at or near its low and opens within the body of the previous day. Next candlestick pattern, 3 white soldiers. A bullish reversal pattern consisting of 3 consecutive long white bodies. Each should open within the previous body and the close should be near the high of the day. Next candlestick pattern, upside gap 2 crores. A 3-day bearish pattern that only happens in an uptrend. The first day is a long white body followed by a gapped open with the small black body remaining gapped above the first day. The third day is also a black day whose body is larger than the second day and engulfs it. The close of the last day is still above the first long white day. Next candlestick pattern, upside Tasuki Gap. A continuation pattern with a long white body followed by another white body that has gapped above the first one. The third day is black and opens within the body of the second day, then closes in the gap between the first 2 days but does not close the gap. Please visit our website for learn Japanese candlestick charting in depth. Link of website is given below in description. How do you feel about this video? Thank you so much for joining this channel.